Back, just about a 20-point recovery from the lows for the Nifty. That said, it's still down quite a bit, down about 0.9% on the benchmark indices. Let's try and get you some longer-term opinion on the markets. We caught up with Rahul Singh of Tata Mutual Fund, and his view is that currently we're seeing a tussle between earnings and valuations. Listen in.
We have seen a wave of earning cuts after the first quarter. I think there is some more to go. But we've probably seen a large part of that wave in the first quarter itself. I think where the comfort is coming from is really the valuations, and with the valuations being at 10-year average or close to 10-year average, and with the bond yields where they are in terms of the Indian bond yields as well as the global bond yields, I think there is comfort on the valuations more than comfort on earnings. And that's how I would characterize the markets, and that's how the markets are also taking it. It's a tussle between what is the right valuation and whether we are at the fair valuation given the bond yields have come down. And I think that is where the comfort is coming from. And that's why you're seeing markets kind of range bound at these levels. NBFCs as a space, I think the business model is getting challenged, especially in some of the smaller NBFCs, non-corporate backed. So we are not trying to paint the whole NBFC with the same brush. But yeah, I mean, it's a narrow set from which you have to choose from.
Okay, all right. Let's shift focus then from the equity markets. Let's talk about the commodity space. Dharmesh Bhatia joins us to fill us in with his commodity trading strategies. Dharmesh, what do you have for us today?
Good morning. For short term, I'm expecting the bullion market to show further firmness. With rupee getting depreciated, you can expect the domestic market in MCX to go further high. I'm expecting international market to head towards the key level of $1,600. With bond yield heading south, maybe around 140, 130, I'm expecting the bond 10 years treasury yield to head towards, which will give eventually support to the bullion pack. And with equity meltdown, and you can expect some trade wars keep on arising, and the currency war on the edge, you can expect the bullion as a safe haven pack. So gold in domestic market, you can expect maybe 40,000 in coming months. Before Diwali, I'm expecting 40,000 plus, whereas silver can give an exponential rally. The reason between gold and silver is that the gold and silver spread was 94. The ratio was 94%, which was 28 years high. So that means 1 ounce of gold was 94 ounce of silver. But now I'm expecting the silver to head towards northern side. So you can expect any speculative dip is a good level to accumulate silver also. For speculators, silver will be the best bet compared to gold because silver has a potential to head towards 19 to 19.5. In domestic market, you can expect the silver with rupee depreciation can head towards 50,000 also. So both bullion pack, I'm very bullish. I'm expecting any decline is a good level to accumulate.
Dharmesh, we saw a bounce back in crude prices yesterday on the back of a surprise surge in the inventory data. You know, where do you stand on crude?
From the Gulf region, I'm expecting that energy to be on a higher side because that's a growth economy. But on the other side, with Trump policies, he's really trying the level best to push the price on a lower side, maybe $50. 2020 is the election, and he definitely want the dollar to be higher level and the crude to be lower. So he's trying his level best. But with OPEC countries, it's really they are increasing the data and increasing the production. On the other side, you can see that both the sides they are playing games. So for current scenario, I'm expecting the market to be in range. The higher level will be on like 4,300 to 4,350 in the domestic side, and international side you can expect the energy to be max to 60. Above 60, the turnaround can be there, or else the market will be in a range of around 10%. It is $53 to around $60.
Okay, all right, Dharmesh, thanks so much for joining in and filling us in with all those strategies. Well, on that note, we'll wrap up.